welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, it was a flat day for the indices yesterday, but a vibrant session for a lot of stocks and sectors. If one really looks at the Nifty price action in the last three trading sessions, you'd actually see that the absolute gain only comes up to 30 points because the index has largely remained pretty range bound. On the downside, 24,170 and on the upside, 24,400 has been the key range. There's been no decisive move on either side and traders are actually content playing the range as of now. For the Nifty Bank, the index has declined over 600 points in the last two trading sessions, courtesy the decline in HDFC Bank. But beyond the major indices, there have been plenty of stocks and several sectors that have actually performed quite good. So rail PSUs were in action yesterday and many also hit record high levels within the space. Fertilizers, FMCG also saw a sharp amount of buying as well. Now the question is, will the indices continue to be range bound and will it continue to be a stock and sector specific action till the big and heavyweight earnings start to kick in? Well, we'll find that out in our conversation with our top market experts today. Good morning to all our viewers and good morning, Shail.
Good morning, Sakshi, and a very, very warm welcome to thousands of people who are joining us on this lovely Tuesday morning. I have always believed Mangalwar hai to Mangal hi hoga, and we are all set for a opening in about let's say 27 minutes, Sakshi. But 2 points to consider. The market is in a consolidation zone in the point of view of indices of all sorts, whether it's Fin Nifty, Bank Nifty, Nifty, maybe the CPSC index, FMCG, pharma. All these indices are in a consolidative zone for a reason that over the last 5 weeks and 8 weeks we've seen massive rallies because we are ahead of a major event, which is the national budget 10 sessions from now. We are now consolidating. This is a time correction that's happening on the Nifty and the Bank Nifty. Trading zones have narrowed. Support levels are seeing a bounce and resistance levels are pushing the index back. So as far as trade is concerned, I think indices offer none, and they are just sort of whiling away time unless important news comes from the point of view of pre-budget developments, or of course we are headed into the major one on July 23rd. At 9th of July, there are, as I have said, 9 trading sessions left because July 17th is a holiday, next week smack in the middle, Wednesday. Now that doesn't mean that there is no action. As Sakshi pointed out, railway PSUs. Yesterday was a blowout on RVNL. More than 8,000 crores worth of transactions happened. The delivery structures are fairly strong. Similarly, IRFC, Aircon, Rights and Railtel were in heavy demand. Previous week you had a very strong rally in defense counters. Actually, my understanding is this week we'll have fertilizer stocks moving. We'll have the agri theme moving strongly because the monsoon has now covered the entire swath of India, and you are seeing very strong sowing happening as far as the agricultural space is concerned. So keep an eye out on the fertilizer stocks, FACT, NFL, RCF, the two Gujarat twins, GSFC, GNFC, they will start to flourish in trade from today onwards. And of course, a strong move continues in the energy space. The CPSC index, the PSU banking index are in very fine shape. As far as major events are concerned, the quarterly earnings are upon us, and today is the day of GM Breweries, Delta Corporation and RS Software to declare their April-June performance. I am more keen to watch GM Breweries. This is something which has been already at 1 year high, and the counter, especially the alcoholic space, is doing pretty well. Coming back to the Nifty, buy on dip, 24,250. If you get 24,200, that will be amazing. That's the intraday zone to buy. So what happens is that the Nifty moves towards support 1, support 2, or if you are lucky, the weekly pivot, and then from there on there is a sharp bounce as we had seen on Friday evening yesterday. But like I said, there is no trade in the Nifty and the Bank Nifty except intraday, but a very strong momentum in cash counters. It's the Fin Nifty's weekly expiry today. We have the counter just slipping 0.2% out of the 5 trading sessions that have gone past since previous Tuesday. The Fin Nifty is down in 3 sessions. In terms of outperformance, it's unbelievable rallies seen in Fin Nifty components RECL and PFC. These are power financing companies doing extremely well. REC is up 12.8% over the past 5 trading sessions. PFC is notched up 8% gains. Also in the gains are HDFC Life up about 5% on a weekly basis. And what's slipping lower? LIC Housing Finance and Bajaj Finance. So this is what is the sum total of what is expected today. 2 block deals, QIPs opening from Pitti Engineering as well as Jupiter Wagons. Jupiter Wagons is something that we've tracked so many times. This is the second QIP in as many years, and this time it's an 800 crore QIP at 655 rupees a share, down about 9.4% from the close. Let's get back to Sakshi. What is the news coming in from Wall Street, Sakshi? What are our foreign friends doing? I believe there are 2 major testimonies on the Senate today as far as the US markets are concerned, the Fed governor and the Treasury Secretary speaking.
So the US stocks did climb towards new record highs as traders were awaiting the beginning of earnings season and also monitoring the developments in the US presidential race and looking for signals on the Federal Reserve's future actions. But they did end on a mixed note right ahead of US Federal Reserve Chairperson Jerome Powell's testimony. The S&P 500 and the Nasdaq, they gained about 0.1% each and 0.3% each, but they settled at record high levels, so that's a positive part. The Dow Jones, however, that slipped marginally about 0.1% in the overnight trading action. Now, following this, the US 10-year bond yield eased to 4.2%. Among the commodities, we've actually seen gold futures drop to $23.70 an ounce, while Brent crude oil futures, they declined to $85.65 a barrel as well. Asian stock indices followed the US peers and opened higher, with Japan's Nikkei rising the most by over 1% to again hit its fresh record high of 41,239. Topics also rose by 0.5%. South Korea's Kospi also hit its highest level since January as well. So those were the kind of moves that we saw. Hang Seng and Shanghai lower in trade, about 0.2% lower, and Shanghai about 0.3% lower. The Gift Nifty, however, is indicating a positive start to the Indian markets. About a 14-15 points of an uptick at 24,394 is the kind of an indication that we are getting from Gift Nifty. As far as the flows are concerned, the FIIs were net buyers in the cash segment for the 4th day in a row, and they did purchase stocks worth about just 61 odd crores on July 8th. On the other hand, domestic institutional investors, they net sold the shares to the tune of 2867 odd crore rupees on Monday. So that's the kind of move that we saw. Now, as far as stocks are concerned, MGL, we've actually seen the state-run company announce a price increase for CNG and the domestic PNG to partially offset the rising cost for gas. The delivered price of CNG will be raised by 1.5 rupees per kilogram and domestic PNG by 1 rupee per standard cubic meter in and around Mumbai. So that will be important to watch out for. Following that, the entire city gas distribution space will be keenly watched out for. Also, shares of Swan Energy will be in focus today after BlackRock, the world's largest asset manager, has acquired stake in the company via block deals through its funds. So BlackRock Emerging Frontiers Masters Fund and BlackRock Global Funds India Fund has acquired 0.78% and 0.58% respectively in Swan Energy. There are several business updates. Godrej Consumer Products, the company expects double-digit volume growth and high single-digit growth in value terms across home care and personal care segments in the quarter ended June. Also, Senco Gold is going to be in focus. The jewelry retail major has said the company has achieved retail sales growth of 11% and same-store sales growth of 4% in Q1 of FY25. Average transaction value and average selling price has also seen a growth of 12% odd rate, and the total sales growth was up 9% on a year-on-year basis. From railway space, Jupiter Wagons will be in focus today. The company has opened its QIP, set the floor price at 689.4 rupees per share. Pitti Engineering, the company has opened its QIP for raising up to 360 crores and set the floor price to at about 1054 odd rupees per share. Urja Global, the company has informed the GST authorities that it has been carrying out search operations at its corporate office since July 3rd. HFCL, the company's Netherlands unit, has also incorporated subsidiary in the UK for making optical fiber cables. Nestle will be in focus. The shareholders have now approved the continuation of current rate at 4.5% as royalty payment to the Swiss parent. Also, we have Emcure Pharmaceuticals that will debut today on the bourses, so that will be important to watch out for. The grey market premium trend is indicating a 36% listing gain for Emcure Pharma, which is a mainline IPO again. So we'll continue to watch out for these particular stocks today, Shail.
Ladies and gentlemen, 8:43. Shortly, Mr. Umesh Kant, Head of Equity Research at Cholamandalam Securities, will be joining us to discuss his view on the markets. And a little later at 9 a.m. we have Mr. Rudra Murthy, Head of Research at Vachna Investments, coming on the technical side. Now let's look at, Sakshi, some of the stocks that in the market have outperformed dramatically. And I'm looking at Kotak Bank, 4.5% higher over the past 1 week or so. This is in, how should I say, contrast to the 5% drop that we have seen in HDFC Bank. So you can well imagine how Nifty is flat and the Bank Nifty is also doing nothing much. HDFC Bank, as we all know, is the highest weighted stock in Nifty, about 9.5%, and about 35% in the Bank Nifty. Despite that, you see there is no correction, so you can well imagine the strength that the others are bringing to the pie. Yesterday's themes, Sakshi, were a very smart move coming into FMCG counters, primarily driven by Dabur and Marico's business updates. I'm looking at ITC, 4.5% higher on a weekly basis, 445. Hindustan Unilever has shown a very smart move. It is up 3.5% on a weekly basis, 25.95 for you. And of course, there is no stopping ONGC. On a weekly basis, ONGC is the top performer on the Nifty, up 9%, and it has also crossed the 300 rupee mark. We'll keep an eye out on ONGC for two reasons. There is the Russian visit which Prime Minister Modi is undertaking, and it's underpinned. The India-Russia strategic partnership is underpinned on defense and energy, so keep an eye out on ONGC as well. Sakshi.
Continue to look at some of the brokerage houses reports that we should be keeping an eye out on today. So Jefferies came out with its report on GMR Airports. It has a buy call and a target of 100 rupees per share. This is after Delhi Airport's T1 forecourt canopy recently collapsed after heavy rains. And Jefferies has mentioned that although the traffic has temporarily been moved and the company handles only, and the airport only handles domestic traffic itself, so they actually believe that this will largely unaffect the financials of the company. And they also believe that the company will be continuing to focus on the ramp up of the passenger flow going forward from here. So they're largely unaffected. Citi has come out with a report on Affle India, and that's interesting. It's initiated a buy rating with a 1600 rupees per share target. They believe that the company is positively leveraged to digital ad spends, and the company is well positioned to benefit from recovery in mobile ad budgets, and the company's ROE is focused on the M&A strategy should see a business turnaround in large developed markets like the US. They also expect a 20% top line CAGR over FY24 to FY27. Now on FMCG space, Citi has come out with a report on Imami. Here they have raised the target to 900 from 625 earlier. They believe this stock can expect a re-rating led by earnings growth acceleration, strong growth in seasonal portfolio, recovery in macro development brands, margin expansion is key as a catalyst going forward from here. On the IT space, Bernstein has expanded the coverage on IT. They believe that they are going to be looking at outperform ratings on persistent systems and KPIT technologies, and they have a market perform rating on Coforge and underperform rating on Tata Elxsi as of now. On GCPL, that's Godrej Consumer Products, Goldman Sachs has come out with a report. They believe high single digit organic volume growth in India could be sustainable. Industry leading volume growth is continuing for the company. They also see FY 25-26 EPS estimates about a 1 to 2% cut driven by the currency depreciation. They've introduced FY 27 estimates, raised the target on GCPL to 1500 rupees from 1475 earlier, and they continue to maintain a buy rating on this one. So these are some of the brokerage reports I'm tracking. Shail.
Right. And Mr. Dharmesh Kant joins us, Head of Equity Research at Cholamandalam Securities. Namaste Dharmesh ji, a very warm welcome to you. 9 sessions left before the national budget, and we are hard pressed to explain the rallies that are incessantly happening. Yesterday in railway stocks, all of last week in defense. Some of these moves are parabolic, and they represent the trajectories which we only see in circuses. How are you looking at sentiment on the Lal Street, and what do you think looks good, what looks overheated?
Yeah, good morning, Shailji. Good morning, Sakshi, and to all our viewers. I mean, the railway theme, the defense theme, and every other theme which should have been incidental to the budget, like fertilizer space, housing finance space, all have been rocking very hard. And sentiments are very positive on the Dalal Street. The only worry was that the monsoons, which are deficient in the month of June, has been catching up rapidly across the board. And if that is the scenario, then the fears and the worries about some, balancing act being played out in the budget to cater to the rural India or the areas which are affected by the less rainfall, it can take away some infra spending by the government. So that doesn't seem to be the case right now. We have 2 more weeks to go before the budget, and I think this budget was delayed in purpose, sensing the kind of environment we were in. Having said that, I agree that valuation-wise it's very, very hard to, justify why these valuation multiples are there. Yesterday evening, I met with, 5, 6 good corporate guys. They all are high up in the order in the manufacturing circuit, and everybody was just hard to explain the kind of valuation multiple the market is giving to their own companies, sensing that the growth cannot be higher than 15-16% on the manufacturing side. So that's the reality of the two sides. Fundamentally, nothing wrong economically, macroeconomic point, microeconomic point, whichever parameter you look at it, everything is in fine shape, a textbook kind of a shape they are in. The only, the dichotomy is the valuations are very high. And that is how the liquidity is playing out as of now. So play with the tide. There's no point going against the tide or tsunami. So just go with it, flow with it. And as far as investment bets are concerned, there's no point of money. Even if it corrects 10-15% for whatsoever reason, that's fine. That's an opportunity to get back again into your value wise. So that is how we are advising our clients. For fresh trades, the message is very clear. You can expect a 15-20% kind of a downfall from your entry level. Reasons as of now is not visible to anyone, but it may happen. So that is if you are ready for that kind of a risk appetite, so this is the market to be in.
Okay, this is a market to be in. Dharmesh, good morning to you. What about the kind of fresh move that we've seen on the railway space as of now? Would you be encouraged to take fresh bets 10 days ahead of the budget, or would you just stay if you have it but do not make fresh investments? How would you advise?
Good morning, Sakshi. We rolled out our budget thing from this budget to next budget on 7th of June, just a couple of days after the elections were. And these were the, topics out there: RVNL, ERCON, tax rail, HAL, DCX system. We These were the top 5 picks, along with the likes of SBI, ICICI Bank, LIC of India, GICRE, and GMDC. So we tried to balance between, supernormal kind of a growth and a normal kind of a growth with some valuation comfort, and the one area where the valuation comfort is not there, but the structural story is intact. So as of now, we are not recommending any fresh buy position because it is also a big surprise to me the how say RVNL has moved in last 2 or 3 days. So, I mean, we initiated this stock at 140 levels and, 550, 560, all the prices are coming like fire on the street. So, as of now, stay put, no need to book profit. And let's wait for the budget to roll out and then we will take a fresh call on the sectors. The only two themes which I think is still has not played out to its potential. One is the chemical space, but much depends on how the Europe shifts up on the chemical space. And the other is the textile space. So these are the two areas where we think, I mean, in the particularly in textile space, something may come in the budget to help, the garment manufacturers per se. So Mr. has already sounded out his, doubling of the total garment revenue. And that is one space where there might be some juice left after the budgets. But let's wait for the final contours.
Long-term investors actually look for two reasons. One, it helps them book profits at fairly high valuations, and then it also welcomes new traders into the market. Yes, valuations are expensive, but that doesn't mean we don't participate in the market with the due caution and the due respect that prices deserve. But one piece of advice is this is not a market to short. If you are not agreeing valuations, just be on the sidelines. Of course, markets will correct, and then it might give you an opportunity to come back into stock prices. But this is a market which is run by liquidity, and the first thing and the first lesson that we learn in the market is never argue with the flow of money. This is something which is coming into equities by truckloads, and this has to be respected. Dharmeshji, one or two stocks that you still find attractive at current levels, and of course only SIPs, and of course long-term performance. Yep. 1.5, 2 year minimum holding period. What looks good to you?
Yeah, I mean, private sector banking space still looks pretty good to me. ICICI Bank is the case in point. If you look at the business update for the Q1 by most of the BFSI, they were around 17 to 18% kind of a credit growth with better asset quality in place. At the same time, this time deposit growth was also in place. Keeping in mind that it was an election quarter, so normally CASA comes down. Sequentially, it has come down a bit, but if you look at a YOY basis, 10% kind of a deposit growth was there. What lagged was the public sector part of the BFSI segment. So most of the public sector banks were around 10%, 11 or 8% kind of a range as far as AUM growth is concerned. So I think if you want to single me out, I mean, I would pick up two stocks as of now, but these are exactly as you rightly pointed out and helped me out in putting the votes to place. A SIP method. One is ICICI Bank and the IndusInd Bank from the private sector banking space, and the other is Life Insurance Corporation of India. So I understand the equity overhang, government dilution and everything, but look at the valuation multiple where this LIC of India is sitting around 16% kind of an ROE with less than 10 kind of a PE multiple, growth still 14-15% in line with what the private sector offers. So, and they are trading at a PE multiple of anywhere between 80 to 120. Whereas this you are getting at around 10 kind of a PE multiple going 1 year forward. So a lot of scope out there. It may not move immediately, but if you are willing to wait for 2 years, as I mean has been the case with most of the public sector undertaking in the defense space, say Cochin Shipyard or Majgaon Dock, they did not move for years. But when they moved like 3x, 4x very easily. Even RBNL that matters. So I do think Life Insurance Corporation of India is set for that trajectory, maybe 2 years down the line.
Okay, we'll keep an eye out on LIC. Meanwhile, viewers, there's an important information from MCX. The exchange has informed that end of the day processes for Monday's trade got delayed due to technical glitch, and therefore we are going to be seeing a delayed session. The special session will start at 9:45 a.m. today, and market will start at 10 a.m. today. So keep an eye out on this development as well. That's the information that MCX has shared. So delay in the opening session on MCX for all of our viewers. We'll also wait to have Mr. Rudramurthy also join in. But till the time he joins in, Dharmeshji also wanted to ask you on the IT space. This is the space that is going to be in focus Thursday onwards. TCS will kickstart the earnings season. Today, Bernstein has come out with a report talking about some mid-cap IT firms where they are initiating coverage and are bullish on stocks like Persistent, KPIT Tech. How are you really looking at the IT picture? What is your expectation from the earnings? Large caps versus mid caps? Where will you keep your eye out on?
Yes, okay. I mean, definitely IT would be a sector to be watched out for, and every quarter the same story and the same repeat, story plays out that worst seems to be behind, and going forward 2 years down the line, 2 quarters down the line, things are going to improve. Let's see whether it's the same story or there is some, semblance of bottom in place. Taking into account Cognizant guidance, where they revised their downward guidance by 50 basis point higher, though there was a downward revision of the upward guidance as well, but base seems to be in place once you are revising your downward guidance. Not to forget, a major part of now today's revenue of Cognizant, the growth driver has been the AI platform, which is missing on the Indian IT companies on the large caps. Having said that, as far as mid-cap IT companies are concerned, even last quarter, they were a very good set of numbers, be it KPIT, Jensen Technologies. They all came out with very, good set of numbers. Even Birlasoft numbers were too good. I think they are the ones who would be still delivering a better set of numbers. Only problem last quarter was their valuations went too high, and all the large caps disappointed, so a profit taking ensued after that. I think this quarter again, if they are going to repeat their numbers, both I mean KPIT or Gensar or Birlasoft, then things are likely to again be rocking for them. So they are likely to find more alpha returns compared to the large cap pairs. Large cap pairs, let's wait and see. Because every quarter, say for example, Infosys, last 7 quarters, if you track them, every quarter has been a different commentary from the previous one. There has not been any consistency in the guidance. So that's the problem. So I would not like to commit myself on the IT space as of now. But the sense is, I mean, this time around, it's likely to be, all the people on the street who are commenting that this should be the last quarter of pain and the bottom is in place as far as degrowth is concerned, should be the scenario. In having that in light, I mean, if you are going for SIP kind of investment for next 2 years, large cap IT also merits the attention in your portfolio.
Sure. Mr. C.A. Rudramurthy is now with us, research head at Vachana Investments. Morning to you, sir. Very quickly, 30 seconds, if you could name 2 stocks you'll be watching out for, and we'll come to you for details.
See, for me, Reliance is definitely outperforming the overall market, and after a long consolidation, it has given that breakout above levels of around 3,000 and now decisively trading above those levels. So I'll be a buyer in Reliance, looking for a trading target of 3,250 with a stop loss of 3,170. So now the baton has moved from HDFC Bank to Reliance, and also ITC, after a very long consolidation of over 6 months, yesterday it clearly gave that first signs of breakout. So I'm looking at ITC to move towards 470 from current levels. So a buy on ITC with a stop loss of 435. I will buy ITC for an initial target of 470. So buy on Reliance, buy on ITC.
Right, ladies and gentlemen, the pre-open is upon us. A mild negative tick in line with what the GIFT Nifty was suggesting, although very volatile on the Nifty. Now back in the green, so we'll wait for this one to settle. But what is in pain? HDFC Bank, 19 rupees lower, 16.16. TCS, earnings boy on Thursday, 2 days before, a bit of nervousness, 1.8% lower, 39.22. Okay, what is holding the fort? ICICI Bank, 14 rupees higher, 12.49. Let's look at what ITC is doing, just recommended by Mr. Murthy. 1 rupee higher, 444.90. Lever flat, 25.87. Okay. Now let's look at Infosys. 12 rupees lower, 16.50. How about Reliance? 19 rupees lower at 31.82. Okay, so it's basically ICICI Bank, L&T, Bajaj Finserv and SBI plus ITC which are holding the index back. MCX starts trading a little late, 0.5% lower, 39.25. Nothing to be worried about. Let's look at top gainers. Okay, AFL India, a report coming in 2.3% higher, 1400 for you. Swan Energy, repercussions from block deals, 5% higher, 727.20. New people have gotten. Mahanagar Gas raises gas prices in Mumbai, 4.9% higher, 1751. What else is looking good? Now see, this is the agri theme because the monsoon is now getting spread across the country. KRBL 7.87% higher, 333. This is what is happening in the broader space. No stopping IRFC 2.8% higher, 2.96 sorry 208 2.96% higher. Which are the most active counters to show gains? Nothing much here. Let's do a detour into FNO. Okay, nothing much to talk about in initial trades. Mahanagar Gas we've discussed. Godrej Consumer business update coming in, fairly muted, but the counter is happy, 1.7% higher, 1450. Nestle again news driven, 2645, 1.6% higher. Nothing much. National Aluminium, Jindal Steel. So it's going to be a metals day so far. This is 19 points higher on the Sensex, 24,338. Mr. Murthy, coming to you, sir. Any views on the PSU pack? What looks good, what is super hot, and what needs to be added at current levels?
Good morning. I'll be very clear. Unless you are a very long-term investor, and let me define what is very long-term, at least 3 to 5 years time horizon if you have, then only enter into PSU. I'm very clear the valuation catch-up between the public sector and private sector has already narrowed, and entering at current levels for a very short-term trade, I will definitely not advocate PSUs in general. But however, you have very stock specific exceptional things which you can buy in PSUs where still valuation comfort is available. And let me recommend some of them if someone wants to really get into PSU. Number one, from PSU banks, SBI still looks very attractive to me. So if you want to buy from PSU, my top bet will be SBI. At current levels of 860 still offers value. One can initiate buy at current level. Keep a tight stop loss of about 830. Look at 4-digit target of about 1000 on SBI. Another stock which I like from PSU is Coal India. Again, this stock still at current level offers good valuation comfort. Also on chart, if you see, Coal India has made that rounding bottom formation at around 470, 480, and at current levels of around 490, still it's a good buy. And you can look at targets of around 550 to come and keep a stop loss of about 470, 75 zone. Another stock if I have to buy from PSU and especially from railway, it will be IRCTC. Definitely it is time to buy IRCTC, which I even advocated last week. And all those guys who are looking at valuation comfort and also to remain in PSU, shift from your defense, shift from your other railway stocks to IRCTC, Coal India and SBI. And you can still stay with PSU, but you have to be very stock specific. And for me, after a long consolidation again, IRCTC is showing that first signs of breakout. Yesterday again, it has made a decisive close above levels of 1040, which was last 10 days high, which it crossed yesterday decisively. So even for very short term, IRCTC is looking very good. Buy at current market price. Keep a tight stop loss at around 990 or even 1000 and look at targets of 1150 to come. So be in general very careful in PSUs unless you are a very long-term investor of 3 to 5 years. Avoid PSU in general because of the big move which it has seen in recent time, and also the valuation catch-up between PSU and private bank is more or less done. And if you want to still remain in PSU, my 3 bets will be SBI, and I'll be picking Coal India and IRCTC.
Okay, SBI, Coal India and IRCTC, we'll continue to keep an eye out on that. Meanwhile, a lot of stocks that are buzzing within the renewable energy space also. Inox Wind is in focus, 4.5% higher after it's bagged a 200 megawatt order. HG Infra is in focus. It's done an MOU with Ultra Vibrant Solar Energy, and therefore you see a sharp up move, about 4% higher in trade for this one as well. Of course, MGL is in focus because it's hiked the CNG prices. It's now up 4.5%. You also have Godrej Consumer after the business updates, and you see a 1.5% move on this one too. Apart from this, Pitti Engineering, after that floor price of 1,054 per share on the QIP, that's also reacting positively in trade. Those are some of the stocks that are moving up and about right now. Let's discuss with Dharmesh ji and get him into the conversation. Renewable energy space, since we've been talking about budget and budget related themes, is this also a space that one should keep an eye out on from the upcoming budget perspective? And which stocks would be on top of your radar, sir?
Yeah, since actually, if you look at the space as far as renewable energy is concerned, it has been the structural roadmap is very clear by the government. So, budget would just be a reiteration of the structural story in the roadmap which they have already laid out. And this sector will, be in action for next 2, 3 years, because every year you are expecting around 60 gigawatt of additional capacity to be installed, and for that you need funding. So I would not be playing with the producers of renewable energy rather than the financiers of renewable energy. For I mean the balance equity equation is very clear. For any 1 gigawatt of plant, like 5,000, 6,000 crores of your plant, your capacity you are setting up, 75% comes from debt and 25% from equity. So overall, 300 gigawatt has to be set up in the country in next 5 to 6 years. That entails around 60 lakh crores of funding, of which 11 to 12 lakh crores will come to the debt side. And there, I think PFC, REC stands a very good chance, because valuation wise, they are very, very cheap. They are trading sub 10 PE multiples with ROE in excess of 20%. Growth rate has been in excess of 25%. And if you look at the asset quality, the discount wise is now history. And around, I mean, net NPA is less than 1%. So chances of going wrong is very low. Margin of safety is very high, valuation high comfort. At the same time, the PSU theme is also being played out through this. So PFC, REC are my top two picks for the next 3 years, and I am expecting at least a doubler kind of a story from here on.
Right, ladies and gentlemen, let's look at the top gaining PSU. No surprises here. National Fertilizers, 4.5% higher, 155. Then we have the Railway Twins, which moved yesterday. IRFC, 3.5% higher, 209. RVNL, 3.7% higher, 587. The fourth one is RCF. Then you have FACT, both up 2.8 and 2% respectively. So fertilizers is a theme that you need to keep an eye out on. Where else do you see momentum? Let's look at the sugar space, again pharma led. Agri-Red, Magat Sugar 2% higher, Mawana Sugar 1% higher, nothing much here. How about defense? What was quiet yesterday? Okay, Cochin Shipyard 1.3% higher, 2842. Garden Reach 1% higher, 2630. BEL 1% higher. Mr. Murthy, I'd just like to take your view on a fairly moving stock, ONGC. Deep value still to be had as far as fundamentals are concerned, and now above 300 rupees. What are the charts of ONGC telling you?
Shailesh, for me, it has given a breakout already now above levels of 290-95 zone, and it is trading decisively above that. In fact, if you see last 2 days price action, there is clear support even from volume that yes, the consolidation from February till July, that is for about last 6 months, is now over, and the stock is definitely headed higher. So even in this market where valuation is a concern, you have to be very stock specific, and I will advocate a buy on ONGC, and one can look at targets of around 330, 350 to come on ONGC. Keep a tight stop loss below that breakout zone of about 290, which can be somewhere at around 285, and look at targets of around 330, 350 to come on ONGC. So a very clear buy on ONGC.
Okay.
Sakshi, what are you watching?
Well, a lot of these auto-related stocks are also in focus today. Maruti Suzuki seems to be opening about 2.5% higher in trade. That's going to be in focus for sure. In fact, there is a important news that's flashing. Let me just read that out for our viewers too. And this is with respect to Yes Bank. Yes Bank has now clarified that the news reports that were with respect to RBI nod for a 51% sale plan is actually factually incorrect. That's the clarification that is coming in from Yes Bank. They have said that RBI has not given any in principle approval for 51% stake sale, and they've now clarified that these reports were factually incorrect. The stock is about 1.5% higher at 26.08, but they've definitely come out and said that there is no in principle approval that they have received for a 51% stake sale. Important for us to track on this front. But again, like I was saying, Maruti Suzuki seems to be topping the Nifty and opening at a strong move of 20,325. That's likely to keep an eye. We are going to be focusing on the entire auto space due to that in trade. And of course, there is some relief coming in from Uttar Pradesh as well on the automotive, licenses over there. So therefore, you are also seeing some move on that front. Dharmesh ji, Maruti Suzuki for you. How would you be really looking at this one, and along with this, the entire auto space?
See, as far as the Maruti Suzuki is concerned, it's a trading play as of now. I mean, valuations are not at all comfortable, and once Hyundai gets listed, they will have a serious competition, and investors will have a choice to play the PV side of the vehicles or more, with more options. So right now, Maruti is the only company which is a pure play. So I think one can be there for a trading play, but trimming down your portfolio allocation to Maruti Suzuki is what has been recommended. As far as the entire space is concerned, the only two stocks which still merits attention, having regard to the valuation multiple, one is Tata Motors, where I think once the demerger happens, SOTP itself will take you to 1300 to 1400 kind of a range. So that value play is still to be unlocked to its potential. And the second is M&M. So M&M has been doing fairly well. All its verticals, all its segments has been filing up well. And with the pickup in the monsoons, the farm equipment is likely to again get back into action. So these are the two places where I think much juice is left. Other than that, on the two-wheeler side, all looks to be fairly priced and expensive to me. And not to forget, with higher input prices playing out, operating margins will be in trouble going forward in Q2.
Fair point. Let's look at some other prices that have settled. KPIT Tech, remember there's a very strong brokerage report coming on mid-cap IT, and it has KPIT as one of its picks. Needless to say, this is a fresh record, 2.9% higher, 1732. Imami Limited settled 2.5% higher, 770. There's an equally good report coming in on this one. Focus on Britannia. This is the FMCG play. We've seen action coming into a lot of FMCG counters. Now prices are open, ladies and gentlemen. The Nifty 29 points higher, Bank Nifty 12 points higher, IT marginally in the red, Nifty 555 points higher. Very quickly, let's look at what the three main stocks are telling us. HDFC Bank 3 rupees lower, 1632. Infosys 8 rupees lower, 1654. Reliance 18 rupees lower, 3182. These are the three index heavyweights. If they are in the negative, then well, it's not good for the Nifty. Nevertheless, it is in the green. What is pulling the Nifty higher? ITC 1% higher, 447.6. Kotak Bank 15 rupees higher. L&T 21 rupees higher. Bajaj Finance 34 rupees higher. Hindustan Unilever 6 rupees higher. These are the stocks that are pulling up the Nifty. Very quickly, let's get into the most active counters on NSE 500. There is absolutely no stopping RVNL. Another 8% higher, 611, the top traded as well as the top gainer on NSE 500. IRFC in tow, 5% higher, 211. Maruti, 3% higher, 12,400. Remember, it's Tuesday. Mostly Maruti rises on a Tuesday. RCF, 3% higher, 235.79. IRCON 1.5% higher. BHEL a percent higher, Cochin Shipyard 2% higher. Let's look at the top gainers. GE Shipping 4% higher, 1400. Swan Energy, this is a block deal that happened yesterday, up 5%, 727. Fertilizer is in action. RCF 3% higher, 235. What else is moving? Mahanagar Gas 2.7% higher, 1715. A quick detour into FNO and then I'll go to Mr. Murthy. Nothing much. GMR Infra 1.5%, 100.4. Hindustan Copper 1.3% higher, 347. Well, this is a decent opening. Nifty Bank is now up 123. Nifty is up 42. Nifty 500, which is the broadest measure, is up 82. Double the gain that you've seen on the Nifty. Coming to you, Mr. Rudramurthy, what looks good in opening trades?
See, for me, 3 stocks in opening trade which looks positive, definitely holding up at current level will be one, Bajaj Finance. See, for me, after their business update, what they gave, the stock did not move up. In fact, which was for me a thing which I felt for very short term, that was not a reaction which was good into. So for me, Bajaj Finance at current level offers a great risk reward. There is a strong support at levels of around 7,050. So for me, keeping the tight stop loss of 7,050, which is about 1% from current level, I'll be a buyer in Bajaj Finance looking at targets of 7,300 to come. So a 50-60 rupee kind of a stop loss and a 250 rupee kind of a move can come in Bajaj Finance. So second stock which I like on chart is Voltas. After a good consolidation, Voltas is now showing signs of breakout. So I'll be a buyer in Voltas for a target of 1,500. With a stop loss might be at around 1,460. And third stock which I like buying in this market is PVR. PVR for me again at current levels offers a good risk reward buy, and stock is definitely showing clear signs of consolidation and breakout. And even in weak markets, these are stocks which are holding out. So for me, market is very stock specific, and PVR is a buy for me for a target of again 1,500 with a stop loss of 1,450. So 3 buys: PVR, Bajaj Finance and Voltas.
Got that. Several stocks are buzzing away. Inox Wind almost 5% higher in trade right now. Swan Energy up 5%. Affle is running away 6% higher in trade on that City report, which has initiated a buy rating with a target price of 1,600 on this one. A strong 6% surge that we can see on this too. Apart from this, block deals now taking place within the railway pack. RVNL, you can see about a 422 odd crore rupee worth block deals have exchanged hands. About 70 lakh shares have changed hands. IRFC again about a 120 odd crore rupees worth block deal has also taken place. So the railway space is abuzz with all the action. It's the small caps that are again performing in trade, and you can see a whole host of move beyond Affle, Swan. Amber Enterprises up 4%. Crompton Greaves is up and about 3.4% higher. You have Mangalore Refinery that's up 3%. CESC, Himadri Specialty Chemicals, that's up 3%. Gujarat Mineral is also up and about. A lot of these chemical names are also flying away in trade. Mr. Rudramurthy, chemical space, are you keeping a keen eye out on some of these stocks that are buzzing in trade?
See, for me, yes, this has been one sector along with IT. If you see for longer time frame, it is definitely making that bottom formation, and it is coming to those crucial long-term support zone. So if I have to buy for investment and for a portfolio kind of a sector, if I have to pick, definitely yes, chemical is one, IT is one. You can definitely even look at pharma, FMCG. So these are sectors from where you can pick stocks for your portfolio. So if I have to buy specifically from chemical, yes, stocks like Navin Flora, stocks like Aarti Industry, these are stocks which one can buy. But for very short term, and if you are a trader looking for momentum, I will definitely avoid them. But if I have to buy for a portfolio kind of an investor who wants to pick up some stocks, yes, Navin Flora and Aarti Industry are my two picks from chemical sector.
Got that. So that's the view coming in on the chemical space. Let's also get Dharmeshji into the conversation. You know, Dharmeshji, what's now buzzing in trade within the few minutes is now the consumer durable space. That is buzzing in trade. Stocks like Amber Enterprises up 5.5%, Serra Sanitaryware 4.5%, Crompton Greaves, V-Guard, Havells, Dixon, Blue Star, all of them are a buzz with all the action in trade. In case the upcoming budget, which we are expecting, focuses on more money in the hands of people, giving some kind of maybe tax cuts or some leeways right there, is consumer durables a space that will benefit?
Sakshi, to my mind, I mean, this is just a trade from here till budget. Once this freebies, if it come by, or some soaps come by, more, consumer surplus in the hands of people out there. So all these companies, if you look at the valuation multiple and the historical growth rate, and structurally, I mean, any EMS kind of a company, where there's a limit to which you can grow, since keeping the capacities and everything into the overall ecosystem into place. So they are heated up. I mean, this is the last leg of the rally which we are seeing in stocks like Voltas or other in the same space. So enjoy the ride for 1-2 more weeks. And my only advice would be before the budget, the Friday, you should be booking out of all these companies because you will get a very good, decent opportunity to enter at lower levels. Input prices have actually gone up. Most of these companies will have a tough time negotiating the margins and they don't have a pricing power. Any shopping mall, anywhere you go, there's a huge bargain discount out there for all the products which these companies offer. So consumer durables, I mean, last leg of the rally is on, and one should be looking out for cashing out of most of these counters.
Right. I think we need to focus on the auto space and chiefly Maruti. Mr. Murthy, can we look at the 12,600 Maruti call? This is moving fairly rapidly. It's already moved quite a bit. But this is something which is coming after many weeks. Maybe this is something that catches your interest. The all-time high on this call is somewhere like 629 rupees, now buzzing at about 219. I'm requesting the PCR to show the Maruti 12,600 call expiring July 25th. You'll see that coming on the screen. Mr. Murthy, your view.
See, for me, Maruti is definitely showing clear signs of strength today. And if someone wants to buy call of Maruti, definitely, yes, you can go ahead and buy. But my only point is one has to also understand buying deeply out of the money options just because you have lower premium into it and with limited capital you can take more exposure. I don't advocate because there will be a lot of time decay also into it. So one can look at buying more and either in the money or an at the money kind of an option of Maruti, or better to take position in futures, go long in future so that this time decay will not impact much. And even if you can buy lesser quantity or even one lot in future, that is much better than going and buying a deeply out of the money kind of an option. But my view on Maruti definitely is bullish. After a long consolidation, today we are seeing this breakout, and also market is definitely just showing that signs of strength towards Maruti. So I will be a buyer in Maruti either in futures, or next I will look at either an ATM or an ITM option if you want to buy an option. And definitely Maruti looks strong to me. It can go and test those levels of around 12,800 to 13,000 zone. So for a target of around 12,800 to come on Maruti, which is another 350 points from current level, you can buy into Maruti keeping days low as stop loss.
Fair point. Maruti is the top gainer in the entire FNO space, 4.3% higher. Let's look at what's the volume that is coming here. Almost 5 lakh shares that have been traded, 330 crores worth of transactions. And Maruti is not alone, ladies and gentlemen. You have entire move coming in the complete auto ancillary pack. Look at how strength is coming back into Electra Green. This is something that started moving yesterday. Electra is up 2%. TI India, which is Tube Investments, up 4% at 4,500. JBM Auto 4% higher at 2319. Talbros Auto 2% higher, 348.55. And of course, smaller ones like Motherson M Sumi Wiring 1.7% higher, 73. We track somewhere like 43 auto ancillaries for you, and about 35 of them are in very strong gains. Again, let's look at the all-time highs as far as the NSE 500 are concerned. You have Amber Industries 5.9% higher, 47.62. Remember, my apology, yes, 47.52. Remember, the budget is upon us 9 sessions from now. There are a lot of chatter about PLI schemes being extended for newer sectors and being renewed for existing ones. Keep an eye out on all those threads. Record highs on NCC 343, 2% higher, RCF 3.5% higher, 236, and of course BEL, Gas Authority, Federal Bank, National Aluminium. A huge list, but I'm just pointing out the ones that are in low ticket size and high beta. Sakshi.
Processing related stocks are in focus. You were mentioning KRBL. Shell, it's now 9% higher in trade. And Kohinoor Foods has also climbed about 8% up and about. Rarely do we discuss stocks like Chamanlal Setia Exports. They are also up 11, 12% in trade. Several stocks within this space are up. Gokul Agro, Agrotech Foods. Those are the kind of stocks that are buzzing away in trade. Mr. Rudramurthy and Mr. Dharmeshji, I will also ask you to give your sense on the kind of agro focus that this budget can have. Mr. Murthy, can you suggest to us technically how are you looking at the buzz in this stock, and then we will ask fundamentally what Dharmeshji really thinks.
See, for me, yes, this is a sector keeping only budget as a theme. If one has to play out, you can. For me, one stock, if I have to pick up from the group, whatever we have seen now, yes, LT Food is one stock which can do good even from current level. It has given a breakout today above levels of around 275. So LT Food for me on dips to levels closer to around 280 will be a good buy. Look at targets of around 300, 320, and definitely one has to keep a stop loss of around 270 for this trade, and you can go long. This is purely a budget play and nothing beyond that.
Okay, Dharmeshji, your sense, agro-related stocks, how will you look at it?
This is actually, as far as government is concerned, they have already hiked the MSP prices of 14 crops in India. So that is always done outside the budget. But that has been done. Fertilizer subsidy is one thing which one can expect some more to come through in the budget. That has to be seen how and in what form the government is trying to encourage the sector. But my own take is anything which depends on the subsidy is not a wealth creator. It's just a trade for that. Coming to agri producers like the rice companies, so we have this thematic basket, rolled out 3-4 months back on all the 3 rice companies, that is Chamanlal Setia, KRBL, and LT Foods. So the basket is doing very well. Chamanlal Setia was the only company which was not performing after our recommendation, but today I think with this up move, even that has moved into good gains. Play this basket out. I think wait till Diwali, 3-4 months more into the season of basmati rice, and there with more traction coming from the Middle East, and there's a easing period of 9 to 12 months for the rice to be sold. So I now do think that these companies are in a proper place. Valuation wise, still there is a much comfort out there. They are not expensive ones, and 15-20% kind of up move from here is likely to be on the table for them to trade at a bit slightly higher valuation multiple. So both comfort is there.
Let's look at the Adani pack. Sakshi, all 10 stocks are in the green. Adani Power leading the charge, 2% higher, 714. Adani Transmission, 1.9% higher, 900. Let's look at what Adani Ports is doing and Adani Enterprises. 1% higher on Adani Ports, and Adani Enterprises is also 1% up at 31.47. I think there is a broader theme which is running in the market, which is refinery stocks. Let's look at Chennai Petro, 1022, decent block deals happening. MRPL is also something that I had watched. Keep an eye out on this one. And of course, you see the entire AMC setup doing pretty well. This is the financialization of business assets that's happening. Bombay Stock Exchange 2.3% higher, 2436. Remember, it's far away from its all-time high. What also is moving? CAMS 1.9% higher, 3834. And of course, you have a decent move which is coming into CDSL. CDSL at 2349 is also moving fairly well, 2.1% higher. Mr. Rudramurthy, amongst these three high beta counters, CAMS, CDSL and BSC, what would you prefer?
See, CDSL definitely is a good buy for me. After making that big move from levels closer to the 2100 from where it gave a breakout, and then it moved to till levels of around 2500. Now for last 3-4 sessions, stock consolidated, made a strong support at around 2300 zone. So at current market price, I will be a buyer in CDSL. Keep a stop loss of 2300 and expect the stock to move back to those levels of 2500 and even above from there. So CDSL is a clear buy for me and the best buy among the three stocks what we now spoke.
Fair point. CDSL will also be looking at its 1:1 bonus issue, which will be readjusted in the stock price in a while. I just want to look at the FMCG index as well, up 0.25% at 58,766. While the index is showing nothing at all, but a very strong move coming into a lot of stocks. Let's focus on Titan. Now this is a beaten down counter which is presenting an opportunity to get back into the scheme of things on the long side. 1.4% higher. This is the top performing stock, and there is a lot of short covering happening after a series of sell-offs. Mr. Murthy, what are the charts of Titan telling you?
See, for me, Shailesh, Titan, after the business update which came and stock came down in last 4 trading session, even there was expectation in the street that yes, the business update may not be to the mark of 10 to 12% growth what they were looking for, and what came was only 8%. But however, as you said very correctly, after last 4-5 days kind of a cool off in Titan, the strong support for this stock is somewhere closer to 3,200 or 3,180 zone. So there is no meaning shorting the stock because all that news is already in the price. So rather it will be other way around. If this support at around 3,180 holds, so you can expect a definite short covering to come in Titan. So I will be a buyer in Titan, keeping a tight stop loss of around 3,180, which is just 20 points away from current level. And you might expect short covering. But however, this is just a retracement kind of a trade. The direction or the short-term trend is still down, but it has moved too much down in last 4-5 trading session. So one can definitely expect a retracement. And if you are a very short-term trader, keep a tight stop loss of around 3180 and look at buying Titan. But still it is a move against the short-term trend, which is on the downside, and it is just a retracement trade.
Okay. Well, there's news coming in from the past space on CESC especially. The company has raised the tariffs by 5.7%. In fact, the company has also added a fuel adjustment charge to its customers. The stock has moved up. High point of the day, 5.4% higher right now. Dharmeshji, Power Space and CESC, how are you looking at it?
I mean, we are not looking at power producers currently from a fresh investment. Most of them have moved up quite high. This is a news trade, and you are getting the reaction to that. And the only point is, if you have already invested in, say, power producers like JSW Energy or Tata Power, NTPC, CAC, stay invested. A fresh allocation should be through the indirect route. We talked about that through the finance route like BFC and REC, which does offer a good opportunity as of now. Other than that, all these companies are not one standard deviation, but plus two standard deviation higher to their 10-year mean multiples. So on the valuation averages are concerned. So very expensive now.
Okay. What about you, Mr. Murthy? Power space. Today, a lot of buzz is happening. So, CSE is news driven, but Adani Power is up by 4%. Torrent Power is up 4% as well. The entire space seems to be a buzz with all the action. Even the power financiers are up and about. Power space, what looks good to you?
See, for me, the move now in CASC for last 3 days has been more like a parabolic move, and entering here is definitely not advisable. But if you already have long positions in CASC, you can definitely hold on to it. Yes, you might see higher levels to come, might be 200, 220 zones can be a target for someone holding CESC, but I will not advocate a fresh buy here, because if I have to buy here, my stop loss will be very deep and it may not be a good risk reward trade to enter currently CESC. However, PFC REC has been two stocks which from levels closer to 100, 120, I was recommending and I was very bullish because you had valuation comfort in PFC and REC. But right now at current levels where PFC is, REC is, it has already been a 5-bagger, and I have not seen such a spectacular 5-bagger kind of a rise in either their earnings or in their business outlook. It has been only the move in price to make that valuation catch up. So again, for me, PFC REC on lower levels can be a good buy. At current levels, I will surely not buy PFC REC because of valuation concern. The only stock which I can still say buy at current level, and one can look at valuation comfort also to be present, will be Power Grid. So for me, yes, Power Grid at around 270, 280 was much better. But even at current price of around 340, one can look at buying Power Grid. And if you want to stay in this sector, Power Grid is the best stock. Keep a tight stop loss of around 325 and look at targets of around 370, 375 to come on Power Grid. So and avoid definitely on CESC at current level. If you have, hold it. PFC REC on dips you can buy, not at current level. And if you want to buy with valuation comfort and from this sector, Power Grid is the best among the pack.
Right. Across the board, there is a move in paper stocks. Again, agri theme, again derived by the budget. Century text, let's look at JK paper. This is a better one. 2.5% higher, 584.55. West Coast paper, 706, 1.9% higher. Malu paper, 1.7% higher, 39 almost. And again, you have bit gains in Star paper, Quantum, Sesha, and of course, like I had mentioned earlier, a smart move coming in, Satya Industries as well. To you, Dharmesh ji, any paper stock which you find deeply undervalued? And okay, let's put this question to Mr. Rudra Murthy. Mr. Murthy, any paper stock that looks good to you on the charts?
Definitely a clear buy on JK paper. No doubt it has moved up too much, but it is clearly making that rounding bottom formation with a clear breakout. And also, if you see the price action which happened on July 2nd, yes, the stock moved from levels of around 540 to 630-33 zone. But that was supported by huge volume. So that means there has been a big buyer which happened into JK paper on 2nd of July. And you saw next 4 days of consolidation and even slight profit booking on this up move. And today again, you are seeing clear signs of the stock moving up. So JK paper at current levels of around 585, I will be a buyer, or even at whatever price it is now, and look at targets of around that 630 to come initially. And further from there, it can move up once it crosses that 630 zone. Yes, even 670, 700 can come on JK paper. Keep a tight stop loss of yesterday's low where the consolidation ended, which is at about 560. So with a stop loss of 560 on a closing basis, JK paper is a buy for an initial target of 630, which has been the previous high. And once it crosses that, yes, 680, 700 can come on JK paper. So a clear buy on JK paper.
Okay, another sector which is agri related, Sakshi, and we seem to have never checked it out, is what we all like, tea.
Tea and coffee.
What
I
a
knew
sharp
that you
move
would talk
coming
about
into
it.
Jayashree tea. So tell me what are you watching? I looked at
Harrison
JC
Malayalam.
8% high
I
and I
saw
said, "Hey
Harrison
भगवान,
Malayalam."
इनकी तो हमने बात ही नहीं करी. All yours, all yours.
So I saw Harrison Malayalam, McLeod Russell, both of them like 9-10% higher. Jeshri that you mentioned is 9% higher. I was just looking at whether your favorite Starbucks will also be in the list. So I was just thinking that next I'm going to be asking you, why are you not talking about coffee these days, Shell? That's what exactly that I was thinking at that point in time.
Just out of stroke of luck today, instead of tea, I had coffee early morning, and I was wondering कि बहुत दिन हो गए टाटा कॉफी नहीं देखा, क्या हो गया? And look at this, how this universe listens. And here is J-Sheet tea in front of me. Here is Tata coffee. All of them very well. Mr. Murthy, would you prefer filter coffee or good South Indian tea? What do you like?
Definitely coming from Bangalore, we always love the rice rasam, and you should have a filter coffee for the same. Either it is morning breakfast or afternoon lunch or even night dinner. We definitely prefer a filter coffee, even compared to any other alternative for that. Okay, now commenting on a few of these tea and coffee stocks which you were talking, Shailesh. For me, the top pick, if I have to buy a tea stock, will be definitely Harrison Malayalam. So this stock gave a breakout above levels of around 215. And see today's price action, it has even crossed the last 4-5 days of consolidation, which was at around 225. So today, any move above 225 was very bullish, and currently the price is at around 234. So dips to 235 or even at current market price by Harrison, and look at targets of around 260 to 70 to come for short term, and you have to keep a stop loss for this at around 220. So buy on Harrison, 220 stop loss, and look at targets of around 260 to 70 to come.
Fair point. 10% higher on Harrison's Malayalam 236, and J3T of course 9% higher 123. Let's look at Tata Coffee. बहुत दिन हो गए देखा नहीं. This is something that needs to be looked at. I can't get the price in front of me, but then we'll look at Tata Consumer for that. That's TACN for you. This is a franchisee holder for Starbucks, and something that Sakshi and I have often discussed many a time. This is something that we've done several shows on as well. But Maruti taking it away, 12,564, 5% higher now. A very strong move coming into this one. I just want to see what the 12,600 option call is doing now. It's at 237. Let me just see. Yes, this is at 237 now. Keep an eye out on this one. There is a fresh move coming in. And Sakshi, if tea stocks are being talked about, how come Zomato will stay away? 211.88, a fairly strong move coming in here. Mr. Murthy, would you have a medium-term view on Zomato?
Yeah, Shailesh, yes, this stock no doubt made that V-turn, not a U-turn, from those levels of around 40-50, where it offered a great buying opportunity, and someone who understood valuation and someone who wanted to buy stocks like Zomato, definitely they have created already a 5-bagger in very short period. But now for me, Zomato, yes, levels of around 180 is a good buying zone if you look at charts. And even for a medium to longer time frame, if you want to buy Zomato at current market price, you may not see a 5-bagger from here in such a quick time, what it saw already from rupees closer to that 40 to 50 zone to 200 now. But however, yes, it can be a 20 to 30% kind of a compounder, and you might find that kind of a return or a fair return equal to a Nifty index kind of a return in Zomato from current zones. So for me, Zomato, yes, if you want to buy the theme of e-commerce, or if you want to buy the new age kind of a sector and you want to be into them, Zomato will be my top pick. Keep a stop loss of around 180, and for medium to longer time frame, yes, a move towards 280, 300 can come on Zomato, but it will take time, and you may not find that kind of a big move which it gave already from current price.
Okay, got that. So that's Zomato for you and the way you should be really looking at it. Petchem makers are actually in focus today. Chennai Petroleum is now up 5%. You have even Mangalore Refinery and Petroleum, that's up 13% in trade. Green Industries is buzzing about 8% higher. Petchem, coke manufacturers, petroleum coal manufacturers, how are you looking at some such stocks, Rudra sir? And anything that catches your attention at this point in time?
Yeah, see, for me, again, stocks like Chennai Petro, Mangalore Chemical, these are all stocks which have run up too much. And I remember it was at around 300 when I was telling, yes, Chennai Petro can be a doubler from here, 600, 650 can be a target. But the way it moved, it was much faster than even Chennai Express. Chennai Petro moved above 1000 levels, which I never expected when it was at 300. And similar moves have been seen even in Mangalore Chemical. Yes, stock from even here can do good, but I don't have that valuation comfort. I don't have that price comfort from here. So if you want to trade, yes, as a trader, I have much better opportunities. We were talking about stocks like SBI. You can look at Reliance. I was even talking about PVR, Voltas. So I was even talking about Coal India, IRCTC. So there are a lot of better opportunities. In fact, I can add towards this list, which I already mentioned, stock like even GAIL at current market price at around 233 still has some amount of valuation comfort. Still on the chart looks very good. GAIL can move towards levels of around 270, 280 from even current level, keeping a tight stop loss of 220. I will be a positional buyer in GAIL. But if I have to buy among these Chennai Petro or even stocks like your Mangalore Chemical, all that, they have run up too much in too shorter period for me. Risk reward as a trader doesn't allow me to buy these stocks fresh at current level. So I would rather buy a few other names which I have just mentioned, and in that GAIL looks very strong to me.
Okay, got that.
Fair point. And this Chennai Petro, so actually I think we'll remember for a lifetime the comparison between Chennai Petro and Chennai Express, plus the fact that Mr. Murthy prefers rasam over tea. Yours, Sakshi.
Yes, that's an interesting one, and we'll continue to keep an eye out on it. Viewers, 24,360 right now, on the Nifty. So we are just about 25 points away or 30 points away from the all-time high level also right now. So we'll continue to keep an eye out on 24,400 yet again. Whether that happens on the markets, we'll continue to watch out for that. PSU stocks are now buzzing. Again, stocks like NHPC, you have BHEL that's buzzing 1.5% higher. We also have stocks like BEL coming back to 4. Some metal related stocks also buzzing away. So that's the buzz within the PSU banking, PSU index as well. Sectorally speaking, barring the IT and the private banks, rest of the space is still holding up into the green. Minor losses can be seen on the banking and the IT space right now. We've already discussed some PSU making stocks, PSU stocks with Rudra sir, but let's go across to the broader markets to see what else can we pick up for our viewers to really look at right here. Let me just pull up. Okay, what's really happening in the real estate space and the jewelry space? In fact, let's talk about the jewelry space. PC Jeweler is coming back in action. It's been continuously buzzing for the last few trading sessions. Titan, we already discussed. Senco Gold is something that brokerage houses are now turning positive on. You have stocks like Sky Gold that Vineet Pulinchkar was talking about just about 2 days ago. That's also in the buzz in trade. Precious metals, Rudra sir, how are you looking at the jewelry space, gems and jewelry? Anything that looks positive to you?
I'll give a new name to our viewers from the jewelry sector, that is Thangamile Jewelry. So if you see this Thangamile Jewelry, yes, the stock made a very big move from levels of around 1,400 and it just made a non-stop move towards the 1,770 zone. and now for last 7-8 trading session it is consolidating. So for me at current price of around 1740 and on dips to levels closer to 1700, I will be a buyer in Thangamile Jewelry, and yes, this stock can move towards levels of around 2000 and one can definitely buy Thangamile. Thangamile is a buy, keep a tight stop loss of 1680. 1680 stop loss, 2000 target, buy at current market price and on dips to 1700.
Well, with this background of Chennai Express and filter coffee, we also have a south-based chain, Thangamile. Yes, this is something which is underappreciated, and one of those jewelry store chains which are doing extremely well, and also on the charts now. Sakshi, it's the PSU banking sector. Thick trade happening on the long side. Let's start with the Nifty PSU banking index, 1% higher, 7,314. Very strong move coming in on this one. And let's look at the chart for the daily. Okay, this is a good one to track. And there are 12 stocks in the PSU banking index. All 12 of them are in the green, led by Indian Overseas Bank, 4.6% higher, 65 rupees. UCO Bank 4% higher, 56 rupees 30. Remember, these are all high beta, low ticket items. PSB 3.9% higher, 61 rupees almost, and Central Bank 64 rupees, 3.5% higher. What about the usual favorites? Bank of Baroda doing nothing. PNB just 1.3% higher, 123. Mr. Rudramurthy, anything in the PSU banking basket that catches your interest on the long side? What are the charts telling you?
See, if you look at charts of, let us say, SBI, for me, yes, this is a safer bet. Downside is definitely limited, and the stock is now consolidating and trying to make that move beyond 860 zone. So yes, if the stock closes today above 860 and stays above that, it can go back to its all-time highs, which is at around 900, 910 zones. So for me, SBI is a buy. Keep a stop loss very tight at around 840, and if it stays above 860 today, yes, the risk reward for this trade is very good, because looking at targets of 900, 910 from current level is a 40-50 rupee kind of a move, and the downside is just 20 rupees where you are keeping a tight stop loss of 840. But if I have to look at charts of either Bank of Baroda or even Canara Bank for that matter, definitely I won't advocate a buy there at current level. And similarly, if you see the business update which came from Bank of Baroda, it was not so good, and stock was already punished because of that bad business update. And even on charts, similar fundamental reasons are shown in price also. So I will not be a buyer in Bank of Baroda. In fact, it is just definitely drifting down and might go and test back its strong support zones at around 247, 250 zone. So I will avoid Bank of Baroda at current market price. SBI looks the good buy. And if I have to see even PNB chart, yes, PNB has been one stock which made that non-stop move from levels closer to 60, 70 rupees to 140 levels. But now, having made that big move, now the stock is again consolidating. No much upside nor downside, and it is just time-wise consolidation. What you're seeing in PNB, strong support at around 117, 118, and again it is finding stiff resistance at around 130 zone. So right now PNB range bound between 117 to 130. I will avoid Bank of Baroda, and if I have to buy, I will be a buyer in SBI for a target of 900 with a stop loss of 840.
Okay, so that's the view coming in on the PSU banking space. Yet again, I will draw Mr. Murthy's attention to the consumer durable space. Crompton Greaves Consumer is, showing strong moves within the F&O space, about 3% higher now. Havells is picking up pace as well. The index as a whole is up by about 1.2% now, and stocks within the entire space seem to be abuzz with action. Mr. Murthy, if I have to ask you, top 2 or 3 counters from within the consumer durables, wires and cables space, which has been showing consistent momentum, How are you really looking at the space and which would be your top picks?
See, for me, if I have to look at Sakshi, this particular sector, all the stocks have moved up too much. And it is a compulsive trade if I have to buy something at current market price. In fact, Crompton was at around, if I'm not wrong, 280, 290. And last quarter earnings expectation was very good. But I was feeling like 280 is much on the higher side. But I was surprised from those levels. Now you are seeing Crompton at 425, 426. No doubt there are good stocks, but at what price are you buying them is very, very important. In fact, buying quality at reasonable price will only give you margin of safety and profits. Buying quality at any price, and if you are not having that kind of a price comfort, you may not make much big money. However, rather than buying quality at any price, I would love to buy quality at a lower price. I would love to buy growth at a lower price. But still, I will say buying quality at any price is much better than buying rotten stocks at lower price. So you have to keep in mind quality. But however, quality at any price, I won't advocate. But if you want to buy something from this sector, as I told, it will be a compulsive trade or even an investment for me. But yes, one can look at stocks like Crompton Greaves at lower level. If you get it at around, let us say 380 zone, I will be more keen now, because you have seen good results last quarter and you can expect that to come back even this quarter. But or else I will definitely avoid this sector.
Okay, you will avoid this sector for now.
Fair point. 9:57 and
Yes, sir. Yours.
yeah, please continue, Sakshi.
Yes, it's
Continue,
9:57. We're just about 50 points, 50 points higher in trade. So 24,370. Just about 30 points away from the all-time high level, and the markets are picking up pace. The stocks that are definitely in limelight is Maruti. Today now almost 5% higher, 12,600. So it's changed a digit yet again, and strong move can be seen on this one. You have stocks like Adani Ports, Cipla, Titan, L&T also a buzz in trade. Let's discuss L&T with you, sir, as the last stock that we can ask you before we wind up the show. How are you really looking at the momentum? There was news flow as well that the company is expanding its semiconductor business through 183 crore rupees Silicon acquisition now. L&T for you, sir.
Yeah, Sakshi, for me, L&T has given a breakout above 3650, 3650 today. Because if you see last 4 trading session, yes, the stock was finding it difficult to break that very short-term resistance at 3650. Today we are seeing a move beyond 3650, and I feel, yes, stock is headed towards levels of around 3710, 720, and once it makes a break beyond that, it can go to 3800 plus zone. And just a last word on overall market from my side. Wait for results, wait for even the budget to come out on 23rd. Valuation definitely overall in general is a concern for me. PSUs, unless you are into good quality stocks, for me, most of the PSUs have run up too much, especially mid and small cap, and even SME is a segment which is worrying me. And another point which I'm sure even Shailesh and you should appreciate, including our viewers, never ever we expected after the exit poll where everyone told 370 plus seats to NDA, and what actually came at around 292. Market, yes, made a dip on June 4th. But even assuming we got 400, I am surprised for a move like 14% in index from the lows of June 4th, what we have seen, and broader market has gone up 15-20%. It is as if the fundamentals are 400 plus seats for NDA. But for me, this is a surprise move, and I will be very cautious in general on market, and let these two events get out. One is budget on 23rd, and second one is, as I told, let the result season come out, and you have to be very, very stock specific. I'm not bearish on this market, but I'm telling you, you can't be long on anything and everything what you want. Be very stock specific, be very sector specific, and be very cautious on leverage. And risk management is of utmost importance if you are a short-term trader. And then let market tell what next, and let us follow the market rather than telling market what to do next.
Right, ladies and gentlemen, with this extreme note of caution, Mr. Murthy, thank you so much for this lovely discourse on how to manage risk and how to read markets when everybody is over enthusiastic and money is coming into the market like truckloads. Thank you so much for your time, and this is the time we call it a day. Sakshi and I will join you back at 2:30 p.m. Meanwhile, have a nice one. Thank you. Good afternoon, ladies and gentlemen. Welcome to our special show of Market Masters. Our guest today is an individual who has taken me about 2.5 years to convince him to come on air, not including the several trips that I have made to Mumbai to convince Mr. Harin